Securities and Exchange Commission have opened investigations into the collapse of that Silicon Valley bank.
On Sunday, New York-based Signature Bank became the third largest bank failure since 2008, when it was taken over by the feds. President Joe Biden outlined the steps his administration was taking to protect taxpayers and small businesses.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected.
So while the Biden administration tries to contain the fallout, will smaller banks, that's the question, be able to survive? And how will this impact everyday banking? It's a complicated topic, but a lot of you are concerned about it. So joining us this morning is Congressman Ritchie Torres, a member of the House Committee of Financial Services, to give us more insight into what our congressional leaders are doing to protect taxpayers, small businesses, your wallet. Congressman, good morning. Good to see you.
Good to be here.
So, Congressman, this is a big topic. You know, a lot of people are worried about their money. So what are the conversations taking place right now within the House Financial Service Committee in order to prevent a repeat of what happened in 2008, right? Because people are worried that they can see a big financial collapse here. What are the meetings that are taking place and what are the conversations happening?
But the single highest priority of the federal government is to protect the banking system, which is the beating heart of the economy. It's the beating heart of every household and every business in America, which needs access to credit. The federal government did exactly the right thing in acting aggressively to contain the fallout from the collapse of Silicon Valley Bank and prevent the contagion from spreading to the broader banking system. You know, the most common cause of a bank run is financial panic, and financial panic is like an infectious disease. It has to be contained before it spreads rapidly and widely throughout the system. And so far, the administration has been effective at containing the financial panic. The federal government has taken two actions. First, the FDIC will ensure that all depositors at Silicon Valley Bank and Signature Bank are insured. But just as importantly, the Federal Reserve has set up an emergency lending program that will ensure that banks have the short-term cash that they need to redeem the deposits of all customers.
So the Federal Reserve was expected to raise interest rates again during the meeting next week, but are regulators reevaluating that now?
I believe that the Federal Reserve should re-examine whether it should raise interest rates. You know, the Federal Reserve has a dual mandate of considering employment and inflation, but a case could be made that we need to expand the mandate of the Federal Reserve to include financial stability. We have to consider the impact that higher interest rates would have on the stability of the banking system.
Okay.
Because,
so, I mean, talk about this for a second, because banking regulations were rolled back. They were rolled back during the Trump administration, right? So I'm listening to what you're saying. How did those changes play a role, if at all, into what's happening in the banking industry right now? And will those regulations come back?
I'm in favor of restoring those regulations. So the largest banks in America are subject to what is known as enhanced supervision. And in 2018, President Donald Trump signed into law a bill that raised the threshold from $50 billion to $250 billion, and noticed that Silicon Valley Bank was at $209 billion. So it was right below the threshold for enhanced supervision. So I certainly think that if we're going to intervene to save banks the size of Silicon Valley Bank, then we should subject them to the highest standard of regulation.
Well, some are concerned, though, that this intervention is setting a bad precedent, because there are several investigations underway right now into what happened at Silicon Valley Bank, especially concerning the bonuses for bank executives and possible insider trading. So will these executives be expected to testify? Will they be held accountable? Should they be required to return the money?
Well, I'm in favor of clawing back those bonuses, and there should be accountability. But let's be clear, there is no bailout. There's a difference between tapping into deposit insurance and giving a bailout, as Congress did in 2008. In 2008, Congress famously passed TARP, a $700 billion bailout for the banking industry. We have not passed a single law appropriating a single dollar for a bailout. We're tapping into the deposit insurance fund, which is funded by banks rather than taxpayers, And it exists. It's a fund that exists to stabilize the banking system.
Let me talk about it, because this was a small bank initially. I don't know if people know this, but this Silicon Valley Bank back in the 90s was just like a small little itty bitty bank. And then they started investing in these tech startups and became very big in the tech industry. But it got me thinking about these smaller banks overall today, suffering because of what happened over the weekend, right? So Moody's, for example, the investor services, put several banks on a watch list for possible credit downgrades. There was that bank in New York, Signature, that is now being taken over by the government. A lot of your constituents in the Bronx, they bank at these smaller institutions, these mom and pop businesses that rely on these community banks. So what are you doing to address their needs at this time?
Look, I'm confident that the actions that we've taken will have the greatest benefit for the regional and the community banking system, right? There was no concern that the largest banks like JP Morgan or Bank of America would collapse. So all of our actions were oriented towards stabilizing the community banks, the regional banks. It's, so much of banking is as much about psychology as it is about finance. It's all about confidence. And our goal is to restore confidence in the banking system. People need to have confidence that when you deposit your money in a bank, it's going to be there. It's going to be safe. Because a depositor is not an investor. A depositor should not be seen as taking risk.
Exactly. All right, Congressman Ritchie Torres, thanks again for being with us this morning and laying that all out for us. We appreciate it.
Of course.
By the way, happy belated birthday.
Thank you.